Okay, a quick update on the Platinum signal service, the trade copier. We're short the euro yen, and one of the reasons why I want to talk about this one is that I also received a question on this one. So the reason is that it is, first of all, the type of trade, it's a continuation breakout trade. So if you watch some of the videos on the website, we traded this continuation breakout trade last week. And then the question was, why are you shorting the euro yen? When I made in the update video, we talked about that low from last week here at 112.06 and the high up here at 116.35. Now that's a big range, but I talked about I would like to see a bigger trending, overall trending move when it breaks out of that range. So we'll go ahead and tighten up the charts right here, and that's what it looks like right here. But so the question was, why am I shorting it today and selling it as a continuation breakout trade when we went long last week and it was sitting up here at resistance? And again, it doesn't mean that we can't. First of all, this range right here is 116.30 to 112.06. So that's a pretty big range. And when we trade the continuation breakout trade, first of all, we're going to scale out at a couple of different locations. That's the first thing to remember. We're going to scale out. But I still have to look back over here to the left and realize that we are still trading, price is still trading inside of this price swing here. Again, this is the 1 hour, I'm sorry, this is the 4 hour chart is what we're looking at. A 4 hour chart just so that we can get an idea of how long it's going to reach some of these second targets. So again, with this overall price swing here from that low or the overall low there at 112.06 to the high, we can still trade inside of that range because the continuation breakout trade, the final target, even though we scale out at a couple of different levels before, but the final target is 150 pips. So there's plenty of room for me to expect that the trade is going to break out and hit that target or move that distance at this point. But again, we want to lock in profits. This is the 1 hour chart. This is more accurate as far as the execution. So what we're doing is, again, trading a continuation breakout trade. Let me tighten it up again. The breakout trade here last week to the upside, and it hit resistance, and now it appears that it's going to approach support. So overall, we're trading the continuation breakout trade on the 1 hour time frame for day trading purposes, but it's still trading inside of this overall consolidation range. It may return back down here to this area of support, the 112.06. I don't know if it's going to take it out. I don't know if it's going to fall just short of it, or if it's going to get really close and drop right on the number and then turn around and bounce right back up again. If you look over here to the left, that low right there was from September 21st. So that's a possibility. But again, I'm not going to sit here and get into the trade and then hold on indefinitely, hoping for the best, because this is still an overall larger trading range. So we have to lock in profit. So at this point, we're up 35 pips on this trade. And again, it looks like it's probably going to approach this support or area of support. I don't know that it's going to hit the 112.06 on the number. It could fall just short of it, turn around and bounce, just like it, sometimes will fall short of a retracement up here at resistance, hit maybe a Fibonacci retracement level on the way back up, and then roll back down. But overall, this was a continuation signal candle. There's the signal candle. There's the Bollinger Band separation. No CCI divergence. MACD histogram is moving to the negative side like it's supposed to. Everything was perfect. It was just a matter of waiting for the retracement. And so let me open this up. Sorry. So after we got the signal, you'll notice that we did not get the 3-pip entry, and then it turned around and went back up, tested that level that it broke out of, which is really, really common. Now, sometimes it'll go up a little bit higher like it did on that candle, that spike high there. Other times it'll stop just like it did on those 2 candles, 3 candles, and then we just wait for it. So it was just a matter of timing. It's just a matter of the signal. So I get a signal, but it doesn't necessarily mean I get the entry. I have to wait for the entry, and the entry is that 3-pip entry. So I get the signal when the candle closes below support here on the 1 hour time frame, and then I wait however long it takes for the actual entry to make sure that the trend has resumed in the direction of the breakout, to make sure that it's not going to, that's one final process or step to make sure it's not going to be a head fake, is using that 3-pip entry. It's critical. It keeps you out of trouble. I've got just so many different videos all over the website where you see one example after another where, for example, it will print a continuation signal candle like this. It's a signal, but the next candle turns around and goes right back up, and you never see the 3-pip entry. So you're never tempted, if you use the 3-pip entry rule, you're never tempted to go short or long that trade because it turns out to be a head fake anyway. So again, but we did scale out. We're up already 35 pips on the trade copier on this trade. So I'm expecting the price will probably continue a lot lower and then eventually possibly hit that 150 pip target, but protect yourself. It's really important to lock in profits. So again, it's moving along with most of the rest of the market. It's a pretty typical day. It is Tuesday, October 11th, and we are trading during the New York session now. So we've got a couple of other trades. We're going to be looking for the possibility of HL30s. But again, with the HL30s, you've got to be really careful. First of all, we want to trade them in the direction of the trend, if possible. And it is possible to sometimes trade opposite of the trend because we're only looking for a 20 pip target. But we will be looking for the possibility of trading HL30s after the 5 o'clock rollover today, leading into Wednesday Asian session. Can't guarantee that they're going to set up those HL30s. And if not, then I'll just have to wait till the London or New York session to either wait for breakouts or Tech 1 reversal trading patterns. So again, another winning trade. Congratulations for those of you who joined the Platinum Challenge. You got this trade if you set it up over the weekend. And trades, I just wanted to explain how these trades work and what I'm looking for, what I'm thinking, my thought process, why I'm shorting it as opposed to last week when we were going long. But again, that's just the way it works. So we're overall, step back, take a look at it, and you can see we're still trading inside of this overall trending move, this low and this high. And again, it could come back down here and bounce off of support, bounce around, go sideways like it did up here, and then create another continuation breakout trade for us to trade it later this week or next week to the upside. These are just all different possibilities. I'm not predicting anything, but that's the way it works. As long as there's enough room for us to trade it to these targets, we'll be okay.